I think I'm back.
I was saying a bunch of like not great stuff about you.
Ah,
So darn, you joined. Okay, good. How's it
hi.
working? You're able to hear me okay? We can get
Yes,
started?
I can hear you.
Okay.
I can see
I
you.
was
This is great.
just saying that this is a conversation where I do think we're going to get a lot covered because just it's, oh, thanks to you and the over a decade of experience that you have. So just a quick intro about you. You're currently VP of Operations at FutureSight, which is, I believe, a $5 million fund, if I got the actual figure right, or we'll just say a fund
Yes.
that you are a partner in. And prior to that, I'll let you get into it as part of the conversation, but there's some other spaces you've been in as far as it comes to investing that I think will be of a lot of value, especially for the audience that I think is just wanting to understand what angel investing is and kind of start to get their feet wet about, kind of what are the different ways and someone can do that. So let's get started, Prathna, with what do you do now? Like, what's your day in, day out work-wise now?
Yeah. Thanks, Bhargavi, for the introduction. And I'm glad we're here and everything is figured
Yeah.
out. So currently at FutureSight, we are an early stage venture fund.
Okay.
We are a $15 million fund. We do early stage investing at the super nascent stage of venture development. So really when a company or founders might just have an idea.
Yeah.
And it's a little bit different than your typical investment approach, which is you kind of make an investment and then you check in on your quarterly board meetings, what
Right.
progress is like and
Right.
updates. Here, a founder gets an entire operational bench team from day one.
Mm-hmm.
So a
Wow.
team of marketers, researchers, product leaders, engineers to kind of work through the early days of startup building are super painful.
Yeah.
And working with a team of people that have done it before is presumably, and this is our belief, like no one has it figured out, is that it increases the odds of success,
Right.
right? And so, also known as a venture studio.
Yeah.
So, what my day to day looks like is we started this fund 2 years ago with my partner, John Carberry. John is an exited entrepreneur, has built lots of software. I came from Maple Leaf Angels with this investment background. So the both of us together are this beautiful complement. And I think that, yeah, everything in my life led me to this place to be able to build a studio. A
Yeah.
venture studio is basically a part co-founder, part investor. So we
Right.
would work, yeah, I think I've described exactly how we work with founders. So my day to day is everything in terms of running the show here with John. So it's working with our
Yeah.
investors. So we bring in LPs or limited
Yeah.
partners who are either individuals or family offices or
Okay.
institutions. And we then look for founders to invest in, and then we work closely with the team and then spin out companies and then make an investment into them. So end to end, it's very entrepreneurial what we're doing as
Yeah.
well. So I would say now compared to before, I have a lot more founder empathy. And
Yeah.
this shit is really painful, to be
Yeah.
honest. Like,
It is really
yeah,
painful. What a great quote. Okay, so at Future Insights, because I see Neha asking the name of the
future
studio, uh,
sight.
it's Future Sights. Oh,
Yes.
I think there's two errors I just want to call myself out on so that everybody knows we're not trying to be perfect out here, which is instead of 50, I said 5, small difference.
Yeah.
And then it's Future
Yeah.
Sights. Thank you. Thank you. Um, the the way you're describing it sounds like a bit of a mix of what you see out there as far as accelerators and like the kind of like boot camp for founders mixed in with, and we're supporting you financially to scale the company or scale wherever you're at. So it seems like a mix of that. Is that a fair statement to make?
I think that's fair, but people, the real technical folks in the
Yeah.
industry are
Yes.
going to be, are definitely going to take exception to the verbiage that we
Okay.
use.
So this is
Um,
why we're here. Help
so,
us.
so there's, research labs are great for discovering problems. Incubators, I would say, are great for discovering solutions. Accelerators are great for figuring out what your product market fit might be.
Mhm.
Venture capital would be great for taking a small business to a large business by infusing it with capital. I would say our organization is the only type of entity that exists across the life of the business, right
Okay.
from zero to exit.
Okay.
And so having a financial partner like that, when typically you'd expect that this is one of many investments, so I don't really
Right.
have the time to devote to kind of babysit every single portfolio company that we've invested in. However, because we're so hands-on and intensive, we will handpick maybe 4 or 5 investments to make per year.
Right.
And so because of that, we're able to be a lot more concentrated in our value.
Right.
And yeah, I think there's a space for it, to be honest, in the market.
Yeah.
Like, we've spent a lot of time studying the studio landscape, and it's just another way of investing.
I mean, it really speaks to the not going across wide,
Yes.
but going deep, and going deep with the select few. And really, like you said, I mean, it's a great compliment to those that are part of FutureSight, that, you know, you're obviously seeing something that you're willing to, the proverbial, I don't like this phrase, but I'll use it, but the proverbial get into bed, but all over a length of a relationship versus here's a check, hit me up and send me the quarterly update in 4 months, like, or, you know, like, or 3 months, but like, you know, there is that big difference. And I mean, it's a great compliment to, in that sense, when you're handpicking the companies that you want, or the companies or the founders, because it might not even be a company yet, that you want to work with. That's it's a really, really great model. But I can see what you're saying about how your team, you're acting a part investor and part co-founder.
Yes. So you were asking me about my day-to-day.
Yeah.
Often my day-to-day is conversations with founders saying, Prathna, do I talk to you as my investor or as my co-founder? I don't know if one of our founders is listening to this, but we have this dialogue often. And it is a good place to be. Like, I feel fortunate to be able to have to deal with that dilemma. Because truly, when a founder looks at you as somebody who is an investor, they get into the zone of, I need to be selling you.
Yes.
And I have seen time and time again, like, I've seen founders sell us really well, and I've gotten fooled as well.
Yeah.
But I've also seen founders just open everything up and be super vulnerable. And to be honest, I have investors too. So I know how to dance that dance. But being a co-founder and actually building with them in the early stages, like, it's very tough to pull the wool over our eyes. That being said, a founder knows, like, oh, this person wrote me a check, so they get into that zone. And recently I had a conversation with one of our founders where I earnestly expressed my desire to not be spun a tale anymore. Like, I was like, I just want to hear the goods, and then we can take this and package it and go outside. It's the single hardest thing a founder can do, because they attach so much of their identity to their work and this business that they've created. So, like, I fully appreciate it. And I'd say, the last 2 years in building this has been me developing a lot of founder empathy as well.
So as part of that, I feel like we could have a whole conversation just about what you're doing, because you're right, you truly are wearing both hats. Let me ask this question, because I want to hear about this other dance that I envision you doing, which is I am your co-founder, but you also are building this and have your own strong opinions founder. So is it a dance as well of, like, here's my opinion on whether this should be, I'm just making this up, whether this should be a monthly packet, a subscription-based program versus a one-time purchase. And this is my opinion, but I am letting you decide, or I'm heavily influencing this. Like, I mean, that I would assume is a dance as well.
That's a really good question. And a lot of it is we have to develop ourselves as well as investors and leaders and coaches, first and foremost. Like, I have had to shift my methodology from being one that is prescriptive, because, like, in my DNA and my family background and upbringing and all of that is, you see a problem, here's the solution, just go do it. Like, it's easy, and you scream it off the roof. But the lesson for me has been to try and understand, you know, this is somebody's life, sweat, and tears that they've put into this, and also you want them to arrive at it themselves. So I think while we offer the operating and the co-founding support, ultimately you're still investing in the founder. I think we're just investing in the development of this individual early days to be able to see what's around them, what the risks are. And if a subscription model is better than a transaction model, we want them to be able to arrive at that themselves by asking the right questions and by challenging frequently. Yeah.
Great way to approach it and look at it. I mean, the obvious next question is, how'd you get here, Prathna? What was your journey to be here? This is, I'm so fascinated and love the way you've described the work that you're doing. And I mean, it begs the question, what was your journey to getting here?
Yeah, I was listening to something recently, and like, you either hear two paths of people entering VC. One is you have your finance degree, investment banking, CFA route, and then you get there. Or the other path is like so random. So
yeah.
I was so it's just these two
ways. It's the
ways.
so random bucket.
So I'm definitely in the so random bucket. Yeah. And like, it can be as random as, you're just in the right room with the right person and you're having a conversation, you connect. I was fortunate to have that. So I was, before getting into venture investing, I was working at a telecommunications company, basically in this COO-esque capacity, supporting the CEO with business development, the CFO with finance, kind of serving as the liaise between the internal and external. And that was my first taste of startups. After kind of doing that for a while, one of my mentors, who is an angel investor, had mentioned to me that, he went to these different meetings and was mentoring startups. So my interest was piqued at the time. And like, weirdly, coincidentally, at the same time, there was an acquirer at the door for this business to actually buy our business, and we were growing, and it was just great timing in terms of alignment for me with what I wanted to, because I was being groomed to take over this business, and my heart was just not in it. I was too early in my career, and I wanted to do things a lot broader and just see the world, to be honest. And then we had this acquire at the door, which was interesting. So we went through the sale of that business, and that's how I leapfrogged into angel investing. And I spent 6 months while we were going through the sale of this business, studying the world of venture. I would consider myself today still a student of venture, because there's so much out there, so much to learn, and it intellectually gets my juices flowing like nothing else. So I spent 6 months spending evenings and weekends volunteering with Maple Leaf Angels, actually, to sit in on pitch meetings, to develop my gauge for what do investors look for, what should I be looking for in a founder, and then understanding how this whole ecosystem is curated. And then there was an opportunity, and I presented. I think people were observing that I had a good aptitude for it as well, and that took me to leading Maple Leaf Angels for basically the last 6 years.
So you used some phrases, some words that I'd love to back up a bit and get back actually to a place that I think a lot of people are when they're, resourceful, which is, it sounds like an interesting space. I want to find out more about it. And so they, like you said, start to just research. And so you kind of answered a little bit about what was your path, like what were the things, if you can go back to that time, like what were the things that you started to do beyond good old Google? And as you said, Maple Leaf Angels. What is Maple Leaf Angels? And what is that, and how can you dive a bit deeper into that?
So Maple Leaf Angels is an angel network. An angel investor is somebody who has some capital, who qualifies as an accredited investor, who has the liquidity to be able to do to take on some more risk in their portfolio potentially. And oftentimes it's beyond just beyond your home. You need at least $1 million or a certain net income threshold to be able to do this kind of investing. And there is some regulation around it because of the fact that you can lose all your money, basically. Typically, the type of people that get into this are people who are entrepreneurial, who've either sold a past business, or people who are successful in their career through different professional endeavors and want to give back, their experience and feel like working with entrepreneurs is a great way to do that. So Maple Leaf Angels, and then there's many other angel networks around the country. So in Ontario, there are now 16, and then in Canada, there's many more. I can't remember the number.
How would you describe an angel network?
Yes.
Is that just a group of them?
So the network,
self-identified angel investors, or?
Yeah, so there is, so it's not just you, if you decide you wanted to join a network, you would basically come to somebody like myself, and we would go through your financial story and your experience, and then just make sure there's a fit, and then you join the network. So it's a membership network. You pay a fee, and then you get access to the community and the deal flow. And the goal of it is learning, and then also being able to invest with the group, right? Like a lot of people enter because they have no clue, but they know they want to. So a large part of it is educating and empowering investors to be able to redeploy capital into the entrepreneurial ecosystem.
Got it. And this was, so when you, why Maple Leaf Angels? Because you said there were others. Like, how did you figure out that's the one that you, or maybe you talked to more than a few and this is where you landed on, but how did the fit with Maple Leaf Angels actually happen?
Yes, the fit with that occurred because it was Toronto based, and every group has its own like catchment area of focus. So there's one in North York, there's one in Kitchener-Waterloo, there's one in
geographically based. And that's because for people to meet live?
Well, there's part of it that's that. And then for a while it was, we want to deploy support into this ecosystem here.
Ah, I see.
But actually, like, I think all the groups, in order to just broaden their the sources of deal flow, are now pretty much wide. But yes, it's a meeting point based on where you live.
I see. Okay. And so with Maple Leaf Angels, is it, I mean, because it's hard, obviously there's not a geographic attachment to the name. So is it for, at least for when you joined, was it, let's look at deal flow? And by the way, deal flow is a fancy way of just saying deals, are founders coming through the door, who are pitching. That's called deal flow. Was it Toronto-based, Canada-wide when you first joined, and was there an evolution of that as you were describing with the other angel networks?
Yeah. So the other thing for me that I was drawn to, so every group has its own personality. So it's very important to understand who the leaders are of that group. I think when I joined the group, there was a very strong board, but the group itself didn't have much of a culture. And that's why I jumped into the role, because I thought that this was a great opportunity for me to create it. And definitely as somebody of my background, i.e. not an investment background, and not somebody that looked like the average person in that room, it was definitely a challenge and an interesting challenge for me. So the personality fit is important. You should definitely date and meet with lots of different groups. And then, yes, we were Toronto focused, but very quickly the decision was to go Canada wide after I started seeing amazing entrepreneurs in Alberta, Quebec, and BC. And
is it vertical agnostic, or is it across all industries that you would welcome pitches from founders?
Yeah. So for the most part, I think the groups here in Canada focus on software, because everyone has this opinion of hardware. It's tough to scale. You need a lot of capital. And the government of Canada is a really big investor in a lot of new technology and innovation, and they typically tend to be the largest investors in hardware or clean tech applications. And so an angel investor also wants to feel like, okay, the money that I'm putting in today actually will be impactful for you. You know, I'm not going to be $100K check and you need $10 million to be successful. and some people might do that, but generally it's localized in the sense that you want to see impact in the near future. So vertical agnostic, B2B SaaS, we did cybersecurity, education, government tech, digital health. And then on the rare occasion, there was a film that people wanted to do, or a brewery. I would say those were the anomalies. Those were hobby investments, and bragging right investments, like something that you can chat about with your golf buddies, and have some interesting stories to tell. Yeah.
Fine. You've touched upon a few things that I want to just spend some more time on. So when you joined Maple Leaf Angels, and I'm obviously not to speak for all angel networks, or maybe you have some broad opinions on this, what does tend to be the representation gender-wise and representation when you said, hey, I walked into Maple Leaf Angels and I stood out a bit, if I can put those words, attribute those words to you, like what is it like, and have you seen a change in who's showing up to the meetings, and at least during your time at Maple Leaf Angels? Talk a bit about that as well.
Well, you and I were just talking about this as well before this, and like I want to hear your thoughts too, for sure. But yes, so much change like in this ecosystem in the last 6 years. I actually feel quite positive, and I feel hopeful about the future. Like I'm at Collision this week, and like I'm looking around, there's 40,000 people, like at least half are women, which I love, which is great. And even yesterday while at the Maple Leaf Angels AGM, quite a few women there. So when I first started, my two moments of realization and understanding, okay, this is what I've signed up for, was my first investment meeting when I walked in and I was supposed to address the group. There were 17 people at the time, and they were all old white men, and or some people like to say, I hope no one is listening, pale, male, and stale. That's an interesting.
I've not heard that one before. I've not heard that one before, and I will borrow that one for sure.
So, and there was one other woman at the time. Now, so robust, so many people of color, close to 25% women membership, still small, but not zero. And then my other story was going out to a dinner with the Women in Venture group. At the time, there was like 6 or 7 ladies going out to dinner. And now there's a network of 300 plus women working in venture capital across the country, and all in the span of 5 years.
I talk about this a lot with other friends too, and just broadly finance, and that there is a conversation that is very true about female founders represent, I think what the number is, at 2% of overall funded companies, and the stats are there. The stats aren't to be ignored, but I think it's nice to acknowledge progress. For you to say that, I mean, these are tangible differences. To be attending a group called Women in Venture in Canada, and moving from a table that you just need a single table reservation of 7 to an event of 300 is a tangible difference. What do you attribute some of those changes to? And I mean, it doesn't even have to be a hard and fast answer, but what are some of the things you've seen in these past 6 years that you think are like, oh, this is the reason why there's more people entering? I mean, I'll throw something out there as a thesis to start. Is it just that more women are making more money and therefore have more investable income?
Yeah, I think there's part of that. Like well, actually, I think that there's more women in leadership roles. And that's important because they serve as role models, first and foremost. Like whenever I'm feeling unmotivated or any sort of weight that I feel like I'm carrying as I'm doing the work that I'm doing, I think about who do I look up to that reminds me of me, but 10 years from now, that can inspire me. So inspiration is a big deal. And that's, I think, what worked well for me, and what I find a lot of people A lot of young women reaching out to me just to have a conversation and to tell me about their story. But it takes active effort. But it takes active effort for us to be pulling those women up. But before that, for people to even want to try, like that, that is the biggest hurdle, right? Like we were speaking about Michelle McBain. She paved the way in many ways, I think. And there's a few women in this ecosystem, but there's an increasing number where you're not just looking at the same 2 or 3 people who did it, but there's maybe 15 female leaders who found a way to make their voice heard. So what I would suggest, you didn't ask this question, but what I would suggest is finding, that it takes work. The research is finding people who you look up to and admire. Like, I like the way they think because they figured out something and you're going to learn something from them. And so I am constantly building an advisory board for myself and a community of mentors who will continue to inspire me. Like they don't have to necessarily open doors. So one framework somebody gave me was your mentor, manager, and sponsor needs to be different. And then if you start identifying the diversity within that of those groups of people as well, I think that could be interesting. And then you can sort of be mindful about the fact that, I don't have any women in here. I wonder where they are. And then go out, seek them.
And go out and seek them. So you're at Maple Leaf Angels, and you were talking about just kind of all kinds of founders, a lot of them in software, I presume, because that word tends to spread around that, hey, this is the kind of these are the kind of companies that they tend to invest in. But regardless, you're meeting with founders, and I actually, even with your work at FutureSight, and here there's some phrasing that I think, in our world, we just kind of tend to talk about, but I want to just dive in a bit further on early stage investing, what that actually means, and then in response to early stage investing, in cohesion with early stage investing, what do the words seed and pre-seed funding mean? So just some good old fashioned breakdown of terminology would be super helpful. So with FutureSight, for example, you were talking about, hey, and Maple Leaf Angels, I'm assuming that you were seeing founders really early on and wanting, either funding, or in the case of FutureSight, maybe wanting more than funding, wanting an actual partner to kind of walk through this process with them. How do you define early stage investing? So how would you describe that in layperson English?
So early stage investing, I like that question because it's pretty high level. I'm a high level person. So that the early stage investing, I think you can define that by defining what late stage is, and anything that's not late stage is early stage. In my, actually, let me think about this, because you could talk about profitability, you could talk about revenue, you could talk about team size and maturity, you could talk about product market fit. I think that I would consider early stage as a company that is anywhere below a Series B round. And a Series B is generally when you're raising, 50 to 100 million bucks, let's say, and you are generating, maybe 10 to 20 million in annual revenue. That is, I think that's what the fundamentals would say. However, today, when you talk about pre-seed and seed and A and B, all the names are very mixed up. And
so this isn't hard and fast. There is an ebb and flow to this. If you ask another investor, they might have maybe a different lens to it.
I think the words are helpful to help founders just organize into buckets. Here are some investors that are pre-seed, here are some that are seed, but actually, I think what I've learned is that a founder needs to sit down and think about what is my stage and what is the right type of investor I need to go after. And more often than not, they are going to overshoot for a later stage investor and then be told by them that they're too early and you got to go downstream a little bit.
Okay.
And I've seen that with so many of our companies. They go out and try to raise a Series A round and then realize that they need to be at a seed plus or a seed extension round. Like, honestly, the names to me just piss me off because you're just spending time trying to figure out what you should call yourself. The point is you need some money to get to revenue. Okay, so that would be considered pre-seed. And then once you're at revenue, you need some money to get to more revenue. You can call that seed.
Right.
When you're at revenue, you want to get to more revenue, you can call that A.
Right.
And so it's all about growth and where you're at and the risk appetite at each stage that you're in. So I would say angels take on the highest level of risk. Without angels, there is no institutional investing happening. They are seeding the companies that are being created that then 1 in 10 will succeed maybe, and then go to the next stage.
Right.
And then as you go through the stages, they are a little less, they're a little more risk averse. And because they start having more firm guidelines around here's what our revenue needs to be, here's the kind of return valuations we need to see in order to make a return for our investors. So the key difference is angels are investing their own capital. Institutions are investing other people's capital. When you're doing that, you have targets related to what your return profile needs to be. And so everyone has the same way a founder would do modeling around their financial projections. VC is also doing modeling. And we have one around here's a base case, here's an aggressive case, and then a conservative case of what value we think our companies need to exit at. But the reality is that it's just numbers on a hat. And so you have no idea.
So this is the way you described those different stages is so useful. When you talk about risk appetite, is it fair to say that in turn translates to risk appetite and therefore stage, the names of the stages? Does that translate to the check size of the investor? And so how much money an angel investor is the range of check sizes that you can expect, and therefore how many angel investors that you need to go to. Is there a correlation between those two?
Good question. I would have probably said yes a while ago, but nowadays things are changing. Like I'm seeing I'm seeing people who are really early in their career who are still working, who've maybe, been software engineer at, the FANG and have built a startup on the side and are still building, but realize that they need to be putting a lot of small checks in different companies. They might build a portfolio of 25, 50 companies right from age 28, 30, let's say, and they might do 2K and 5K checks if they can get in. That's the thing, right? Like as a founder, you have a choice to determine who you want in the in your company, on your cap table, right? There is an issue that also comes into play when you have more than 50 people. If you're based in Ontario, if you have more than 50 people on your cap table, that becomes challenging because you then have securities reporting requirements. So there are ways to get around that. By pooling capital, by doing a syndicate, that kind of thing. So where was I going with this?
We were talking about the size of checks and how that correlates. And I asked this question with, obviously kind of being in this space a bit, but I think it's a worthwhile discussion on, this notion that I think is a bit of an obstacle for people who, like you said, full-fledged careers, have investable income. They just don't look at angel investing because they're like, well, I'm not going to write a 6-figure check. I'm just getting my feet wet. And it's an assumption because you can write checks much smaller than that. So, so I think kind of just like trying to have that discussion a bit more because it's not a hard and fast rule. I mean, you were saying that earlier, you were finding that, maybe the check sizes were smaller, bigger, and that there's an ebb and flow to that as well.
I think that once you, it's just getting over the hurdle of, am I going to do this or not? I think once people have decided, the hard part is not in trying to curate the portfolio and the amount of money you invest, but rather it's like holding your back from your excitement to put too much money into companies. Like almost always, any new angel investor I work with, my advice has been observe for the first 6 months, like learn, talk to a lot of people, sit in on every due diligence meeting you can, attend like pitch events, screening sessions, etc. And then start taking notes in your notebook. And then that's how I started, which is just my opinion of founder is this is what I would score. My opinion of company is this. And then kind of see what the average of the room looks like, and then track the company. But like you won't know in 6 months if they're doing well or not. But I think that when people have come in, you know, they get caught up and swept up in the excitement for sure. So I think that the important thing is if you want to go the 2K, 5K, 10K route, that's okay. But you have to, I guess, think about what value you would bring to the companies as well, because at that point now founders are getting more and more educated. They're thinking about their cap table, and they're thinking about, oh, should I take 10 5K checks, or should I take 100K check? And there's people out there who will write the 100K, 200K, 400K checks, but if you're ready to go tomorrow, and that person is taking a month of diligence, they're probably going to go with you. And, you know, if you've demonstrated like a good chemistry. So I think you very much have a shot.
And value and value in other ways. So what are some of the values in other ways that someone writing a smaller check, and I talk about that again because that is often, to your point, an entry into angel investing is not going right to being, you know, six-figure happy and maybe starting smaller. What are some other ways to be angel investor can add value? Or let's even talk about they've written their first check and they're thinking of how else can I be of use to this founder, assuming that they want to be an active angel investor and not write the check and say, let me know how it goes.
So, I mean, a lot of it depends on what you consider your superpower, right? I think everybody as an individual, whether you're a founder or investor, you have to spend the time thinking about what value you bring to the world, regardless of what you're doing.
Agreed.
And so for an angel investor, I would say the same thing. So say you figured out your domain advantage, like say you've been a marketer for 10 years, you know, you understand the B2C aspect of things. That's your superpower. And you might even approach a B2B company with that awareness, saying that I can bring this perspective. It may not be directly relevant to you, but here it is. And people might say, yeah, I want a healthy devil's advocate in my pool, right? How you position yourself. So there's a functional piece. And then the other kind of more human specific piece, I would say, is actually developing this mindset around coaching and understanding founders. Because like the more founders you meet, the more you're just trend spotting, right? Ultimately, that's what this game is. And founders are so laser focused on building their business. They're not often thinking about how they present to their customers, to their employees, to their board members, to their investors. And you can provide that external perspective without that emotional connection and attachment. So if you can demonstrate that through the first couple of conversations, I think you can build a great relationship between founder and investor.
There's two things that I want to highlight from this conversation that you've talked about for those considering angel investing. And one of them is to just be in the space, breathe, drink the Kool-Aid, as they say, attend, you know, angel network meetings, or join an angel network and attend meetings. Just start practicing the trend spotting and practicing trying to get a sense, and then holding back a bit on just, you know, writing a check for the first one you meet and just starting to get your feet wet. And I'm sure even with just the understanding of how you go from deciding to write a check all the way to actually writing it, and there's paperwork, as with everything in life, involved. So like, you know, learning all of that as well. By the way, before I jump on to talking about the next thing, did you ever have FOMO in the early stages where you were, you know, sitting in, listening, right, ranking a founder and going, oh, this is a good one, but this is like, did that ever happen?
If I were to count the number of decisions I've made in my life based on FOMO, like, and actually have earned some money for it, I should not be investing.
Yeah.
Like, I think that, yeah, we're human ultimately at the end of the day. And I think a lot of my work with myself is ensuring that I'm governed less by my emotions and
Yeah.
more rationally. And part of that is when you're investing, it's tough. You're making, there's not a whole lot of financials that you're looking at, and you're kind of investing in futures based on this promise that you believe. So it's a hypothesis, it's a conviction you develop,
Yeah.
and it's a hypothesis that you believe this will make society better or change
Yeah.
society for the better in the future. That being said, like, I have to also say that it can appear extremely scary and very technical.
Yeah.
The one thing I observed, I was at Collision, and yesterday, like some really heavy hitter US VC names I saw on stage, speaking about different trends, and I often hear, like, I spend too much time listening to these kinds of podcasts, and really the reality is that a lot of people are just regurgitating what's out there. The
Yeah.
thought of a unique idea or unique thesis or unique conviction, it's so few and far between. Like, if you find somebody like that, there's this other joke I heard: those who can't do teach, and those who can't build do venture capital. Now, no offense to teachers, because my mom used to be an
Yeah.
educator, and I
Yeah.
have huge
Yeah.
respect for that.
Yeah.
But also, the true genius, for lack of a better term, lies in the people who are building the companies.
Yes.
And so you can craft your thesis around them about how you will be a good supporter and an investor and a backer of this business, but beyond that, you're not doing anything other than writing the check and helping them out. So
I think there's
sorry.
many a founder out there who would really appreciate hearing the way you worded that.
Cool. I'll stop there then.
uh, Talking about angel networks, I mean, we've now covered a few things. I'd love to bring it back to how we met and to bring it back to our connection, and just for, sharing a bit of that. Our connection was through Brown Girl Angels, and which is an angel collective that we are building. And I'd love to kind of, you talked about the benefit of just, it's a great place to start to get your feet wet and start to build experience around just listening to pitches and whatnot. Being part of Brown Girl Angels and this conversation, like, what brought you to, hey, let me reach out and us to this amazing point of having this conversation? Like, what, because I'm sure there's, as being in the space now for a while, there's all these observations you've made. So I'm so curious to hear that. And I'm not asking that as a compliment us, but truly from a place of, how do you see Brown Girl Angels adding value to this space that, I mean, now has a lot of players in it?
Has a lot of players, but still could be way more. Like, that's the first thing. Like, I see it as a healthily achievable challenge, which is similar to when I first started my career in this industry. So why I'm drawn to the mission of this collective is it's personal for me. I didn't have, I was fortunate to have the mentors who were all male, actually. Mentors and people who just had, blind belief in me and gave me a lot of trust to make mistakes and learn along the way. So yeah, part of this is, like, I feel like my life would be a little bit unfulfilled if I didn't find a way to pass that on for other people. And talking about, like, the availability of wealth broadly, and my observation in the last 6 years is that there is a huge pool of wealth that exists amongst the South Asian community, but just, well, generally, but let's say South Asian community. I've just been seeing more and more in Canada here, and that's been very positive and promising. Like, I think 10 years from now, I can't even imagine where we'll be. So the prospect of that is super exciting to me, to see where we've come even in the last 6 years. So the idea, this vision, if you think of, a lot of little girls dream of their wedding, maybe at a young age. I'm dreaming of a world where there's a lot of people who look like me in positions of power and leadership and decision making and financial wealth, changing the world meaningfully. So yeah, that's why.
And like you said earlier, and being able to send the elevator back down to bring others along the way. And I think when it comes to the investing piece and investing, the selection of the kinds of founders and the kinds of companies to invest in, I know you and I have talked offline about, the folks who've come through the door and the folks who with access. And of course, there's the larger stats out there about women and the funding they're receiving. So I have to say, when you reached out, it was, I think I mentioned this to you offline, that I'm, been sharing online as well, that for with any good founder of anything, you are in a test and validation stage initially to say, hey, is there anybody out there that thinks the same way I do? And I think you being a part of this collective and going on this journey, especially with the breadth of your experience and specific to, being part of a pretty robust angel network, is most welcome, and looking forward to doing more of this and seeing what kind of amazing founders come through the door. So this is great.
Such a privilege, Bhargavi. Thank you.
Thank you. I'm such a privilege and joy that in the time that we've just been spending, and even in this conversation, learning from you. It's so exciting.
Much. There's honestly so much, Bhargavi, we can talk about. Like, I think there's a big privilege problem that exists that I would want to get into. But like, if I were to just wrap on a positive note, is that, where things were back then to where they are today, there is meaningful progress.
Yes.
And I think that I think that if you are interested in something, either starting a company or investing, or going for a role that might look like it's designed for somebody else on paper, you should just do it. Because the reality is, nobody knows what they're talking about. So I might get into trouble for this, but yeah.
No, it's thank God it's being said out loud. And we have seen this said out loud in many different ways, which is, I think it was Reshma Saujani in a really well circulated clip, rightfully so, where she talks about being in certain conferences or spaces where she was like, my friends could do this job. My friends are just as qualified. And I think it's exactly that. Just go out there, and it sounds very trite to say do it, but it is essentially what you did. You're like, hey, this sounds interesting. I like this space, and I'm going to go explore and see where it takes me. And as you know, with Brown Girl Angels, we're doing the same. It's like, we see a need. Let's go out there, see who else wants to join us on the same mission, and let's get some female founders of really fantastic companies and ideas, and let's get them funded and be the first stop where a South Asian founder, a female founder especially, knows that there's a whole bunch of women out there who really want to support what they're doing and building and scaling. And that's a great world.
I'm really excited about what we can build together here.
Me too. Thank you. Thank you for this time. And I think usually I do these conversations and I'm always holding chai because that would be the most appropriate. So this is something I have to remember, because I'm not letting you off the hook. We are going to have future conversations because, like you said, there's so much more to cover. We didn't even touch upon what it makes a compelling pitch, which given the number of pitches you've seen, it's something I'd love to cover in a future conversation. I think that would be useful for founders. But for today, thank you. And the rest of your day, I guess you're spending doing more of this work between founders. And are you going back to Collision, by the way? Are you?
Yes, I will be. Yes, I will be at Collision, and then York Angels will have their AGM. And I think it's also conserving energy and picking and choosing where to show up so that I'm effective in the time that I spend with founders and investors. So
fair enough. Conserving your energy so you can be a better version when you show up is, yeah, it's the balance we're all trying to figure out.
yeah, I mean, I like you mentioned FOMO. Like so much of my time in this industry has been driven by FOMO. So
Yeah.
it's a learning process.
Yeah. For all of us. Well, thank
Cool.
you and
Thank you,
have a
Bhargavi.
great rest of the day.
Okay,
Take
take
care.
care. Talk to
Bye.
you soon.